It's fun to stay at the
All right, picture this. It's springtime. Rates are still brutal, inventory's creeping up just a little, and somehow home sales just hit their lowest March numbers since 2009. Not exactly the bounce back everyone was hoping for. So why is the market stalling out, and what moves should buyers, sellers, and agents be making right now? Let's break it down. According to the National Association of Realtors, March existing home sales dropped nearly 6%, falling to an annualized pace of just 4.02 million.
Damn!
That's the slowest March since 2009, and it was much worse than Wall Street expected.
Housing prices are about to collapse 30% in 2025. We just broke the record for mortgage delinquencies. We smashed the 2008 record. That's right. The biggest housing collapse in the history of the world. We just broke the record for mortgage delinquencies right now, present day. Now, we've already entered a recession, and 2024 was a terrible time to buy a home. We know homes are too expensive. We know the normal mortgage payment. We know people can't afford the cost of living. There's no choice but for these prices to collapse. Now, I want to be clear. This is not single family homes. This is multi-family homes, but it's all interconnected. There is many people that bought at way too high and took on way too much debt. So by the end of this year, I expect single family homes to look identical to this, and I expect most areas to have an average of 20 to 30% of drop in home prices. We've already seen 10 to 15% in a lot of areas, but there are going to be some other areas of the country that get much worse than 20 or 30%. I don't think we're going to go back to 2018 levels, but we could see some places go back to 2020 levels for the home prices.
You'll hear some people throwing around crash predictions, 30% price drops, a tsunami of foreclosures. But Reuters and the Wall Street Journal are both clear. Today's fundamentals are nothing like 2008. Borrowers today are of higher quality credit ratings. Loan delinquencies are near historic lows, and supply is still extremely tight. This isn't a bubble bursting. It's the market hitting a wall because affordability, not bad loans, is the real headwind we're facing.
I want to be able to afford stuff.
Speaking of affordability, it's the worst it's been in decades. The median price for an existing home rose to $403,000, up nearly 3% from last year. Meanwhile, mortgage rates are floating between 6.5% and 7%, according to Freddie Mac.
Sellers are coming back to the market, and it's in bigger numbers than buyers so far this year. So in San Francisco, new listings are up significantly over last year. Sales in comparison are flat, and that's left more homes lingering on the market. And as a result, sellers are cutting prices.
Okay, we don't often see prices dropping in the Bay Area. How long is this window expected to last?
It's a great question, and it's hard to say because it's spring. We are just now starting to see more inventory on the market, which is normally really good news for buyers. But those buyers are so nervous because of all the economic chaos right now in the stock market. And, you know, stock options are how most people around here put down those big down payments. How do we know what's going to happen with the tariff situation? How do we know what's going to happen?
And how tech companies are going to do?
Exactly. We are on the heels, Intel reporting tomorrow. This is a giant chip company expected to lay off as many as 20,000 people. That really hurts the stock market. Stocks have been up, they've been down. That also hurts the market because, as you know, in this market, it takes a lot of money to buy a house.
Yes.
So the window could last a while where if you have enough money to buy a house, A, the inventory is out there, B, we're not seeing a whole lot of multiple offers, and C, you're not competing as much as you usually do with those wealthy techies because they're not sure about where their stock options are going from here.
You're seeing it especially in high-cost markets like the Bay Area, where Zillow forecasts price declines of 5% or more. Now, when payments on a starter home are $4,000 plus a month, it freezes a huge chunk of the buyer pool.
Oh, look, frost.
And this isn't isolated to California either. Affordability is crushing momentum everywhere from Seattle to Miami. If rates stay sticky this summer, expect even more market softening. Inventory levels jumped 8.1% in March, and new listings rose 9% year over year, according to Zillow.
Mortgage rates are expected to stay above 6% throughout 2025, only easing slightly to 6.7% by year end. Demand will likely remain exceptionally low unless rates drop to 5% or lower. Vacancy suggests a demand issue rather than a supply shortage. Many homes are available, but not at the right price, location, or type for buyers. The wealth effect from home equity and stock market gains will support home price growth despite affordability challenges. And renters who own stocks may use their investment gains for down payments, effectively buying down mortgage rates.
We're still way below normal inventory levels historically. This inventory surge feels big only because we're starting from such a low place to start with. And because so many homeowners are locked into 2 to 3% rates, they have zero motivation to move unless they absolutely have to.
No.
Then there's Florida, where the contradictions get even bigger.
Florida has over 2 million empty homes, yet it's still one of the most unaffordable places to live. Let's make this make some sense. So let's break this down. There are over 2 million homes in Florida that are sitting unused, unoccupied. And yet the state is in a full-blown housing crisis. People can't find affordable housing. Houses just keeps going up like Beyonce's ticket prices. And the kicker? Insurance companies are raising premiums like it's a new hurricane every week, and it's nothing even going on right now. Yeah, we've had no new hurricanes in the Gulf of Mexico. In the Gulf of America, we've had nothing.
What did he say?
So my question is, who is actually really benefiting in Florida from keeping those homes empty? Because somebody has to be benefiting from that. So they keep the homes empty and the rates high. Then who's really winning in that situation? Really? What's your thought? Why do you think they have so many homes sitting vacant in Florida and why their insurance rates are sky high? What do you think is really going on?
Florida technically has millions of vacant homes, but between skyrocketing insurance costs and cash investors soaking up properties, everyday buyers just can't get in.
Is there no hope?
Insurance premiums in Florida are rising at double-digit rates annually. Now, even if you can buy, good luck affording homeowners insurance. Homes exist, but they're functionally unavailable to the people who actually live there. Now, if you're thinking, well, maybe I'll just buy a smaller home. Yeah, about that.
A starter home is typically modest in size and price. America's home builders are making fewer of these kinds of units.
If you look at the number of single-family starter homes, those defined as being 1,400 square feet or smaller, we used to supply anywhere between 400 and 500,000 units a year.
Over the past decade, builders have put up less than 100,000 homes each year.
Really, by far, the number one reason is the increasing difficulty that many builders have in dealing with zoning regulations.
Zoning laws are set at the local level. The most restrictive ones are often found in major cities.
They are just simply unable to build, or it's become so expensive to build that they can only build high-end single-family and high-end multifamily.
As a result, the median age of the typical first-time home buyer has climbed to 38. That's up from age 29 in 1981.
Starter homes basically don't exist anymore. Back in 1980, over 40% of new construction was smaller entry-level homes. Today, it's less than 7%, according to census data and NAHB. Zoning laws, NIMBYism, and skyrocketing building costs mean there's no quick fix coming. So if you're a first-time buyer, your choices today are compete for fixer-uppers, buy a condo, or stretch into higher-end homes with creative financing. So where does all of this leave us? If you're a buyer, focus less on hoping for a market crash and more on winning small battles. Now, according to Redfin's newest report, homes priced right in Q2 are selling twice as fast as overpriced ones. Now, if you're an agent, this is the year of skill over hype. Your value now comes from strategy, from the actual comps, from relationships, not just opening doors. So are you guys seeing sellers finally blink? Are buyers getting deals? Drop your thoughts below. I want to get a real conversation going. And if this breakdown gave you some clarity, smash the like button, subscribe, and I'll see you on the next episode right here on The Breakdown.